And financial markets are starting a new quarter in the red today, this after the worst 3 months for global shares since the financial crisis. The coronavirus pandemic having prompted a global sell-off as investors try to adapt to the unfolding crisis. For more, let's now cross to our business editor, Stephen Carroll. Stephen, a terrible 3 months on the markets with no signs of things improving.
A new month, Annette, but the same misery on the stock markets. In the first few hours of trading on European shares today, we've seen slumps across the main stock markets. Paris's CAC 40 down by over 3% a short time ago. A similar picture on the markets in Germany and in London as well. And this coming after the worst 3 months for the market since the financial crisis. On some share markets, including London's FTSE 100, it's the worst 3 months since 1987, as there's been sharp sell-offs, particularly accelerated in the last 6 weeks, linked to the coronavirus pandemic. Now, there isn't much good news on the way either. A latest raft of economic surveys from IHS Markit out today showing the massive plunge in manufacturing activity across European countries. Italy, for example, seeing a very sharp drop in manufacturing. The UK seeing a drop in construction and in manufacturing as well. So no good news there on the horizon, but perhaps that can be expected that with the confinement measures that have been in place in many countries, that manufacturing and factories would be shutting down as a result. The other thing we keep an eye on when we talk about stock market volatility is what's called the fear index, the VIX index, which tracks volatility on Wall Street. It's still around 4 times normal levels, so we can expect big stock market swings still to come.
Now, Stephen, while many shops here in France have closed their doors due to the lockdown, it seems French customers aren't exactly rushing to buy online instead.
This is interesting figures coming from the French e-commerce Retailers Association, showing that actually 3/4 of online retailers have seen a fall in sales since the lockdown started here just over 2 weeks ago, and half of those have seen a plunge in sales of more than 50%. This is in contrast to a picture that we're seeing in other countries. For example, in the United States, figures from Adobe Analytics showing that online shopping jumped by 25% in mid-March as the coronavirus was spreading there. Online grocery sales were up by 100% in the United States over that period as well. But of course, the lockdown measures not as extreme in the US at that time when those figures were collected as they are here in France. There's also, of course, difference in the development of online shopping markets. France wouldn't be as developed as places like the US when it comes to online shopping. And we know that retailers in this area are having big trouble, not only with deliveries, because delivery services are being scaled back in many places, but also with running their warehouses, because a lot of unions are complaining that conditions in some of the warehouses for online shopping in particular aren't safe for workers, and certainly that's slowing down the process as well, on top of the fact that consumers seem to be much more cautious about their spending during this crisis.
Stephen Carroll, thank you.